The next speaker is Jean Minnaar. He is the MD at All Mutual Private Clients, and he'll be speaking to us about the trends in the wealth market and how to protect and grow your wealth. He's been with All Mutual for over 20 years. He's a father of 2 kids, has a pigeon pair, and Craig will be happy to know he's a runner as well. So is Craig. And Jean enjoys his wine, and he's a passionate individual. So he's very keen to have conversations. So after this event, if you have any specific questions, chat to him. He's very eager to converse on this topic. And also, out of interest, he played cricket with A.B. de Villiers back in the day.
Just want to send the Zandi says it's witchcraft side. Jacobs. Okay. Yeah, so I almost made it into A.B.'s book. It was literally, there's a chapter about how he talks, how he got into the first team when he was standard 6. And he talks about the net session at which that happened. I was at that net session. I was in grade 9. I was in grade 11, and I did not make it into the first team because of a little standard 6. But I did play with him a few times. Thank you very much, everybody. Thanks for the opportunity tonight. I think it's been really interesting listening to how the agenda was set up tonight, because I think it leads nicely into what I want to talk to you about tonight. And it really is about how all this pulls together. I think in a partner in GM, you have all the elements to pull together a financial journey with your family that can put something together that's beyond geographies and beyond generations, which I think is really what we're trying to do when we're building a story for our wealth. Just to put me in a place quickly so that you understand where I fit in, I'm part of the private clients business by Old Mutual, and it's a business of about 70 billion. What we do is we run private portfolios for individual clients. So these are private share portfolios or portfolios with shares and funds and all kinds of other things in it. We operate predominantly in the high net worth market. But what makes it interesting is that as a business, we are set up to be a partnering business. So we work with wealth managers, in specializing in the high net worth part of the operation, and that we almost, fill up the high net worth back office of a wealth manager's front office. So I'm going to move on quickly and just say, and what we then can do is we create this professional partnership with wealth managers where we manage the client's individual portfolio as a portfolio manager, but that is with the financial planning at the core. Okay, cool. So when you look at managing high net worth wealth, you have to deal with some of the issues that we spoke about tonight in a much broader sense. The high net worth really thinks about their wealth not just in the context of the income statement. So what do I do with my income and how do I save it for retirement? But really about what you do with your balance sheet. And the balance sheet is really about where, I now have this wealth, and it's a very important process to build up wealth. But once you've built up this wealth, you need to ask yourself, okay, who is the custodian of this wealth? What is its meaning over time? And how do I position it throughout generations as well as geographies? And then you start saying, well, there's a whole bunch of other things that you need to bring into the plan. And this is where your wealth manager spends a lot of time understanding where the hedge fund fits in versus where the retirement fund unit trust fits in, where the portfolio manager plays a role, where we talk about asset allocation, local versus offshore. And this is always one of the big questions. What is the right asset allocation? The reality is you can come up with broad, good understanding of broad groups of people, what their broad asset allocation should be, but it is actually individual to every individual person. And especially when you get to a space where you've got a large balance sheet, then the discussion about what your asset allocation is does change a bit. Questions about what's the optimal percentage to put offshore, that could be a very individual discussion, especially for a large client. And then lastly, just a bit about our investment philosophy. And I think it really comes into a discussion tonight about the economy, is when you look into the lens of the world and you see all this uncertainty, you need to ask yourself who is best placed to make some of these decisions. And I think if you find that there are some businesses that are just superior because they've built the right culture, they've got the right management, and you need to spend a lot of time understanding whether they understand the situation they operate in. We spoke about businesses with strong balance sheets and strong management, but it is really the ability then to apply that capital with the situation they're in. You know, you've got you think of, say, Microsoft or Apple, and you think they're an American company. Absolutely not. They listed in America, they've got large business in America, but they have a large business all over the world. So the issues that they're dealing with right now is not really only what's happening in American politics, but what's happening in Southeast Asia, what's happening in China, what's happening in India. And those things are becoming more and more important. So even though some people tweet 1,352 times a day, it's not always relevant to what the CEO of Microsoft decides to do with the Microsoft capital. And that's what we believe in. If you think about investing for 75, 100 years, then you need to think about buying good businesses, being patient, diversifying over time. Okay, so I think the core of what I wanted to talk about tonight is the rise of the global citizen. Okay, and I think for South Africans, this is really important for us because we come from a world where we were not global citizens. When we came through economic isolation, our world was what Trump is trying to do in America right now. It, was completely ring-fenced off from the rest of the world, and we grew up in a world where we were told where to invest our capital and how and whatever. And we've gone through a 30 to 40 year period where that has changed. If we look at the world, South Africa is a very small part of it. Do you see it? Have you found it yet? It's there at the bottom in Africa. Yeah, there we go, ZAF there. It is now only about 0.34% of the world's economy. We used to be, a few years ago, we were about 0.5. It keeps on falling, unfortunately, mostly because other emerging markets are growing faster than we are. And then, our investment market is a bit bigger. We've got some very nice global companies listed here. But even if you take into account the market capitalization of our market, including the Naspers, the AB InBevs of the world, I think it's 0.5 or 0.6% of the world. Now, that doesn't mean that I'm not an optimist necessarily about what's going to happen in South Africa. I am. I think this year, every year, South Africans, we start the year with hope, right? But I think this year we start with expectations, which is a slight difference. And I think I'm very optimistic about what's going to happen, and I see all the right signs. However, if you can be both, you can think of yourself as a global citizen, but be quite positive about the place you live in. And I think it's important to also take into account that if you invest your money correctly, and that you diversify your risk appropriately, then you will also focus more on the right things. I often tell the story where I see people when they when all their money is in their business in South Africa, they've got lots of property here, they invested everything here, then they are extremely interested in what's happening in Limpopo and it almost causes an anxiety with the amount of potholes that you have. But once you go through the process of saying, well, as a person that has the ability to invest globally, to take a broader stance, then you can almost take a much more positive view about your own country. Start have the anxiety that every single decision that the government makes has an impact on all my money. You can start spending your time more positively inside this economy, because the reality is there is so much opportunity out there. So take a guess, as we stand today, how much do you think of South Africa's wealth is invested globally? It's not obviously a number that is a hard and fast number, but we think in 2017 it was about 14%. In 2020, the last number we checked was about 20%. So it is going up, the amount of money that is invested offshore. So roughly we probably think about 75% of South Africans' wealth is still invested in South Africa. And the reality of that is it's because, there's quite natural places where your money will stay. Your bank, your retirement fund has certain restrictions. So you do have to take a view on South African equities, and you will also have South African assets. South African bonds have nice high rates, as you spoke about, and often is a good source of income, especially if you have a portfolio that needs income. But when it gets to discretionary money, people often also invest it all in South Africa. And that often can be a decision that leads to too little diversification in your portfolio. Because what are you missing out on? You're missing out on 99.7% of the world's economy. 99.4 if you take into account some of the international companies that are invested here. And there is just so much going on. We spoke about the mega trends in the world that you cannot actually get access to through South African stock markets. It is things like the change in technology. I actually hate it when people call it technology, because technology is just actually the thing. It's the change in technology that we're seeing, the move towards artificial intelligence, all those types of things. The change in the world's demographics and the impact it has on businesses. I mean, you spoke about the impact that healthcare is going to have in the world. I mean, if you think about, come back to this slide. Okay, no, drop the other slide. It seems, how many people in the world are over the age of 60 right now? Take a guess. 10%? So that's not bad. So it's over 1 billion. In 2020, it went over 1 billion. I think it's about 1.1 or 1.2 billion people over the age of 60 now. It's more people than was on the earth, I think, 150 years ago. So, a lot of what recent history we've spoken about. And so this world of understanding the economy of the over 60-year-old is going to change the economies of which we live in vastly. Then there are also places that you've probably not even, you've heard of them, but you don't think about them often. That will be the 4th or 5th largest economies in the world. So it's not just India, America, China anymore. The Southeast Asia, 65% of Southeast Asia is under the age of 35. And there are, countries like Malaysia and the Philippines and, Singapore, they are highly educated. They're already affluent. They are open to change, and they are outside the firing line of global geopolitics. And it could absolutely change the way we think in the next few years. So I want to move quickly, because the question any good wealth manager gets is, but what about the rand? Is it a good time to take my money offshore? And it isn't an easy answer. Absolutely not. But I wanna just say today that it actually doesn't matter. because you don't invest in a currency. And that's the mind shift we need to make. You don't invest in a currency, you invest in a business. And whether you buy the business here or in the New York Stock Exchange, you actually invest in the underlying business. And it is actually the job of your portfolio manager or your asset manager to actually make sure that they understand where those earnings are and where it's coming from. Because yes, there is maybe a frightening moment for 3 or 4 days where you are actually in a currency. And, the goal is actually to spend as little time there. But when you actually think about it as investing in a business, that's why I'm saying don't think about local and offshore anymore. Think about the businesses that you can invest in globally and in a more diversified portfolio. The reality is, over time, because of the structural nature of the economy, the rand will continue to weaken. Maybe not by 6 or 7% a year anymore, but in good times 3 or 4% per year. It is going to be up and down, and so it is obviously best to try and not time it, to try and make sure that you regularly, if you have discretionary assets, to regularly, with the help of your wealth manager, manage the portfolio to take some money offshore. I have a friend. His name is Bram. He moved to Canada 6-7 years ago, and then he moved to the US about 2 years ago. He is an actuary. He started at Old Mutual the same time as I did. He finished and moved there, and he made the call. He took everything. He relocated his life. We were at such a level that we could talk about whether our earnings and roughly, we continued to earn the same amount of money, okay, after paying our taxes. Is Bram better off than I am? So what's the difference, right? We can obviously, Bram is obviously not enjoying good red wine or braaiing at his home at the moment, and he does not have a lot of sun, and and he needs to spend a lot of time running on his treadmill. But those things are maybe soothing to us, but the reality is, did he make a good call? Is he richer than I am now? The thing is, the only difference between me and Bram is he pays himself in dollars, because his earnings are naturally in quote-unquote hard currency. And then he decides where he wants to invest it, okay, and he invests in businesses, and he will also still invest in businesses like Standard Bank and Absa and FNB and South African businesses. But we unfortunately don't think that we can do that. But technically we can. We have, for our clients, developed a product where you can make a recurring investment that immediately, at the same time your salary turns into dollars and can be invested. It's not about the product, but it's about the principle of just thinking about it like you do not have to. If you're a global citizen, what you're trying to do is you're trying to say, I choose to live in South Africa. Because if you move to Dubai tomorrow, you're not going to worry about the politics of Dubai. You're not going to worry about the politics of what's happening in Saudi, and neither really do I think certain people worry about the politics of New Zealand or Australia. They worry about what their family is doing and what their wealth is doing. And I think if you choose to do that when you live in Gauteng, in the east of Pretoria, if you live in Cape Town and you get involved in your community and you do good in your community, you can live just like an expat. You can invest like a global citizen, and you can make sure that your family is not necessarily tied to the fate of the GNU. Okay. This is the slide I was looking for earlier. Because the world is changing and has got many interesting opportunities, which I spoke through. And then, lastly, if you invest in hard currency, there's this one benefit that you can potentially pay a lot less CGT. And it is about, when you look at wealth management, it's the combination of investments and advice that actually brings the magic. And in this case, if an asset grows in dollars, you pay CGT on the dollar growth. If you invest in an asset in South Africa that is denominated in dollars and its growth is the weakening in the rand and the growth in the underlying asset, you pay CGT on the whole amount. So if you are investing offshore, and you have the means and the discretionary assets, then it makes sense to invest directly in dollars, because there will be less tax. I want to link into GM's story and just talk about the family puzzle. And I spoke earlier about the balance sheet management of a family, but the reality is, the key is when you think about your wealth, you need to think about putting together your family puzzle. And that is why it's important to also make sure that you look after your fiduciary needs. Because actually, planning starts with putting together that puzzle. And that puzzle could be simpler if you're starting out and you just have a salary, and it could be complex if you have kids that are studying in Australia, or or family, or you come from a different place and you still have family that you need to support back in a different country. So the reality is that the structure that you put together does have a big impact on how you structure your wealth, and especially if I have to talk about the trends for South African high net worths, this is something that's changing a lot. It used to be you could use 5 or 6 investment wrappers and maybe somebody had a trust, but the world of fiduciary management changing. Your options about where you could put money and how you should think about it and how you should structure your estate, especially if you are building up a substantial estate, is becoming more and more important. And you can actually blend that with your investment strategy. Something that is not accessible to everybody, but it's very interesting, is if you've got quite a lot of assets and you have lots of solutions that you use, which asset class do you put in which? So if you're going to have some cash and fixed interest, put that in the place where the cash and fixed interest isn't taxed, like a retirement annuity. But where it is taxed, use things that have lower tax, etc., etc. And then making sure that you put together estate plans, restructuring. And the thing about this puzzle is, and I just want to, the plea is, doing your will once is important, but making sure it's updated is even more important. And things change, so having international wills, if you've got international assets, making sure that you understand the tax status of your beneficiaries. You can these days have, if you've got foreign relatives and they're beneficiaries of certain products, they might be taxed as income in their hands. So this is becoming more and more relevant, and we see it every day in our lives. More and more of our clients have kids that are studying in foreign countries, maybe coming back, maybe not coming back. And more you're seeing this global citizen still going for holidays in Hermanus, but building their career in New York. Are they South African? Are they not South African? It's very difficult to tell. They might, find a good job at a hedge fund and come back to South Africa, but that does not make them less marketable. Less marketable when the opportunity comes up in another place. So, so this is extremely important, and also something that our regulators are looking at more and more. Gone are the days where you can just make your brother and your friend's accountant the trustee of your trust and never meet, and every now and again say, oh, did we not do a distribution there and there? These things are being checked. The SARS is aware of what's going on. So doing professional management of trusts and trusteeships, and so these things are important. It's not expensive. It just has to get done. Okay. So my final thoughts, and I know I rushed through a lot of things, but I do want to I just want to say the rise of the global citizen as South Africans is something that we need to be aware of. You can be a global citizen and still be a great South African. And I think, and more, I think that is what needs to be done. Your family puzzle, build that puzzle, make sure when it changes to put the new pieces in, make sure you're aware how it changes over time. What we do is we've got a private portfolio manager that walks that path with you and your wealth manager. It means that you're closer to your wealth, that you can understand it, and it's not just about shares. It can be shares, funds, all things together, but your specific allocation, it can be very relevant. And then, these days, you can have something that's distinctly made for you. Thank you.